That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
Welcome to the summer road trip. I'm Don McDonald, on the road, along with Tom Cock in the studio.
I'm here, as assigned.
And we are here to try to help you deal with money, to try to help you deal with the financial aspects of your life, and to understand particularly the investment part of dealing with money, because if you're not investing it, you're not going to enjoy the future that you need when the time comes that you're either not able to work or don't want to work anymore.
Yeah, most investing should be for retirement. There's a way to invest leading up to retirement. There's often a way to invest after you're retired, but you got to have a plan around all that too. By the way, that does not include how much of this stuff is out there. Can't tell you the number of posts I've seen in the last few days, because we're now in the second half of the year. The 5 investing ideas for the remainder of 2019.
Oh, give me a break.
It's everywhere. I just read Wells Fargo's suggestions, which include, I know this will shock you,
yeah.
Walmart, because their e-commerce sales are up 37%, and CarMax, because everybody needs a used car in the second half of 2019. Those are stocks you
Did they
have
say
to buy.
why?
I'm just telling you. I didn't really read why.
I swear they just make this stuff up because they've got to fill those pages.
Yeah.
And here's the problem. They've got to fill those pages with the answer that everybody wants to the question that can't be answered, and that is, what do I do now?
Yeah, which is always the question. So, by the way, just to pick on my brother who's visiting this week from Chicago.
You must pick on your brother.
He wanted to know. He wanted to know the 5 things. I said, no, I'm not going to tell you. He does. He's not a stock pick. He's a college professor. He's got it in a 403B. Doesn't even. Anyway, I wouldn't tell him. But you don't need to know either, by the way.
But why is it, Mr. Psychology there? You're gonna be the psychologist for a minute. Why is it that everybody seems to want to know that next big thing? It is one of the top questions we get.
Yep.
Everybody I deal with says, well, yeah, but what do I do now?
That's always the question because, well, for one thing, they've been conditioned to believe that we know that. They've been conditioned to believe that their broker knows that. They've been conditioned to believe that the industry can somehow see the future, which it most decidedly, well, it thinks it can see it, just most of the time it's wrong. That's all. The track record is abhorrent.
Do you really believe, though? Do you really believe that the industry is that naive? These are people with MBAs and PhDs. Do you really think they're that naive that they actually believe their own press? They believe they have prognosticative, predictive powers? It just strikes me that's a foolish way to think.
I think they do believe that. Yes, I do. I think that the people that run mutual funds that are actively managed, the people that sell actively managed mutual funds or sell any product that suggests that you can get market-like returns with none of the risk of the market, I think those people really do believe those claims. Yes, I do.
I'd love to talk to a shrink about that. It sounds to me like delusional behavior. It really does. I mean, the evidence is against them. Think about it for a minute. Actively managed mutual
maybe
funds
you find the
over
one person,
and over again underperform.
Maybe you found the guy, the woman. You maybe found that person that can do it, right? You might have struck lightning or whatever it is, or gold. Struck by lightning.
The mutual fund managing lemur or something.
Exactly.
Yeah,
exactly.
Could have been the lemur that.
Yeah, I mean.
Anyway, I should give out the number.
Well,
shouldn't I?
Yeah, you didn't do that?
I don't remember.
Well,
I don't think I
know
did.
Don's in a very small hut somewhere on the East Coast. He doesn't really.
I'm in the 1989 Airstream Silver Bullet.
Yeah, and if anybody knows a water heater repair guy,
No water
Called
heater.
on-
I got a brand new water heater,
Oh,
and
okay.
it's broken.
Okay.
It's brand new.
What I
just got it 2 weeks ago.
Anybody knows a water heater repair guy that could drop by and give him a hand, we'd really appreciate it. We'll fix your
I'm gonna get it
401k
fixed.
for you free of charge if you do that.
And your water heater. 855-935-TALK is our phone number. That's 855-935-8255.
And as a bonus, we're going to give you a book. if you
we
call.
have a holiday weekend bonus?
We have a holiday weekend bonus, and the screener today is Taylor, who wisely already, he's the producer. He pointed out if you really want to understand all this, why people make these decisions about money, read Jason Zweig's book, Your Money and Your Brain. Tell you everything you need to know. We're wired all wrong when it comes to this.
Well, yeah, but, he doesn't, and he needs a new book about money managers and their even more foolish brains. Because he really doesn't address their delusion. He addresses our delusion.
Investors. Yeah, that's true. Yeah, it's a good point, by the way. I didn't like his column today about stock buybacks. That was a little bit in the weeds, but so it goes.
Well, sometimes, as we know, sometimes it's hard to come up with a topic that isn't in the weeds, but there is so much going on in your life that involves money that we know you need some help from time to time, and we're here to provide it to you absolutely free, no charge, no obligation. 855-935-TALK.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
855-935-TALK is our phone number, 855-935-8255. I'm Don McDonald on the great summer road trip, traveling across the country from Florida to Seattle by August, where I'll be hanging out for a little while.
Yeah, we're really looking forward to seeing you out here. We've reserved some great weather for you. It's going to be terrific.
You always do that for me, and this year I'm hoping a little less smoky.
Well, I tried to give it up, so I haven't had anything in a couple months, so maybe that'll start.
So far,
that'll be a good
so
start.
good.
Yeah, so there you go.
Give us a call. We really want to help you deal with your money issues, plan better, discover if you really have the right plan, if you're investing the right way based on science and great amounts of academic research. Are you on track for the kind of retirement you need? Are you in the right places? Give us a holler, 855-935-TALK, 855-935-8255. And while we did make fun of people,
I want to finish the thought
wanting
on this.
to know the next hot thing, what do we do? What are you suggesting they do?
Here's the thing. I mean, when somebody says, here are 5 ideas for the second half of the year, here's why you don't need them. I cannot tell you the number of portfolios I've looked at over the last 25 years where they had a series of ideas. Because you can kind of remember the late 90s, right? The idea was technology, I think, right?
Oh, .coms.
Oh, yeah.
Yeah, it's all .com all the time. .comming.
Yeah, and then there was, kind of just big U.S. companies, right? Because those are doing well. Then it was gold, right? Because there's people have the
it's always been gold now and then.
Yeah, that's true. But at a time it was and what was the idea last year? I think it was a thing called Bitcoin, which by the way is rebounded, so we'll have to redo our thinking there, Don. I'm kidding, but you don't need ideas.
Oh yeah,
you don't need a series of ideas. What you need is a properly balanced portfolio that includes really all of those ideas, all of those stocks, all of those types of investments, and there's nobody who knows anything about the short-term future to tell you buy this idea instead of another one. That's the reality. That's what we're trying to say.
I think people forget. I think they forget that, when they hear about these hot ideas, that if you own a globally diversified portfolio, you own pretty much everything on the planet. So therefore, if you think Walmart's hot, you own it. If you think CarMax is hot, you own it.
Yeah.
You own them all.
You got it. So
that's the way to do it, because here's the reality about investing. Individual stocks come and go, rise and fall, succeed and fail, but the economy of the planet goes on. And of course, there's no guarantee it's going to continue to go on, but it certainly has for as long as we have records. The economy of the world has grown. So that's what you're betting on when you diversify. You're betting on economic growth. And that's a pretty good bet. Much
Indeed,
better
it
than an
is.
individual stock.
Yeah, I mean, individual stocks are a guess, right? They're a fugazi. They're out
a
there.
game.
Yeah,
they're gambling.
Yeah, they're gambling. So you're hoping. And by the way, the only reason to ever own an individual stock is because you think you're going to make more than just, as Don said, just the growth of the economy, the productivity. That's the only reason. And there's no reason to believe that you or your broker or your mutual fund manager can pick one over another. In fact, the track record is very poor of people that try to do that. So what I was trying to say about the 5 great ideas is you don't need them. You already got them if you've got a diversified portfolio. You own those things already, so you don't have to worry about it. You could read the article, I guess, because maybe you need some light summer reading. You know, you're tired of reading about the Revolutionary War or something like that, so you need something lighter, but otherwise, no, don't do it.
You mean the airports during the Revolutionary War?
Yes, well, you know,
Yeah. Did you?
We're not supposed to talk about that, remember? We got in trouble.
I just think airports were important. Air power is important. I was on the deck of the USS Yorktown for the 4th of July.
That's right.
I learned all about the importance of air power in
You had
war.
a
World War
C-17
II.
fly right over your head, which was a very effective plane in
Yeah.
World War II, as you know.
That big,
No,
that
it was
big
not in
ugly
World War
plane
II.
with the big
That's
radar
not
dome.
ugly. What?
dome
Oh,
on
that's
top.
the AWACS. Yes, that's important plane.
It's a little AWAC though. It was
Yeah.
2 engines. It was a little
Yeah.
2-engine AWAC.
They have to fly it off the aircraft.
But it was great.
So
Saw the fireworks out in
Yeah.
out in the river here in Charleston. It was really wonderful.
there you go.
855-935-TALK is our number. 855-935-8255. And here's the thing we're really getting to. We waste a lot of time trying to figure out what to do, what to buy, where to be. Should I be in? Should I be out? Should I be over here? Should I be over there? Should I be doing this or that or this other thing? And we neglect, and almost everybody in the financial services industry neglects the most important part of doing what you do with your money, and that is saving it for the future, having an actual plan.
Well, this always surprises me, too, because you read these surveys, right? I find it fascinating. So there's a new one out, Charles Schwab did, that Americans believe they'll need $1.7 million on average to retire. That number is completely meaningless because if you spend $30,000 a year and you're going to get $40,000 from Social Security, you don't. And I find that weird in many ways. But here's the one I find even weirder, Don. 2/3 of U.S. workers say they're pretty confident about their retirement. 66%, I guess, right? Mm-hmm. That they're gonna live comfortably. 42% have done any calculation. Now, how
That's what I was talking about. No plan.
How could you be confident if you haven't even put it down in an envelope and said, I'm going to quit here, I have this much saved, there's my Social Security, et cetera? You'd have to have at least that, right? But no.
And you know, it's funny. I did it last week. Because I'm kind of in thinking about retirement mode.
Yeah.
Which is still 5-7 years down the road before I semi-retire.
After
but,
this
you know,
show,
I'm
it may
thinking
be
about
sooner.
So I sat down. It could be tomorrow. I ran some calculations really quickly on my iPad in numbers, you know, just in a quick little or spreadsheet program, and it was so refreshing to go through that. You know, people don't want to do it, but when you do it, you look at it and you go, either I got to do something, or I'm in pretty good shape.
Well, and I think that's part of it. Like I haven't felt well in a while, and I don't want to go to the doctor because I don't want to get the bad news. I understand that. But the longer you wait in either one of those occasions, the worse it could be. So it's best to take your medicine financially and medically and get moving forward because you're going to need to know.
And if you think, and this is where I'm going to be hard on our industry again, if you think going down the street to your friendly neighborhood banker or stockbroker or insurance agent is going to help you get a retirement plan, you are going to be extraordinarily disappointed because that is not their area of expertise. I've been in this business for a long time. See, I have experience on the retail side of the financial services business, and the brokerage firms, particularly insurance companies, don't hire people for their financial planning brilliance.
No.
They hire them for their high degree of sales
There
skill.
you go. They can get you excited about something, get you into one of those 5 hot ideas. That's what they're good at.
Or that equity indexed annuity. Oh, got another one of those this week. I hate equity indexed annuities. We're going to talk about that later on, too. 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Oh, yes, we are. And we bar no holds or hold no bars.
We've held a lot of bars.
Bare our teeth.
There you go.
We did. We used to, yeah. We were younger.
Different day.
855-935-TALK is our phone number. 855-935-8255 on this 4th of July weekend. One of those extended holidays I noticed. Yesterday was supposed to be a work day for a lot of people, so I'm trying to call people to make appointments for things and do business. I'm going, you're all closed.
Yeah.
There was no Friday federal holiday.
No, the banks were open, etc. So, yes, you should have been there. We let
but nobody was
people kind of work yesterday, kind of not work too. So
I don't think there was a lot of work going on yesterday.
That's okay.
A lot of playing going on.
That's
not a lot of work.
okay.
And probably
'cause
not a
they'll be
lot of work
hard
going
at
on
it.
today.
No.
But it's a good time to take a long weekend, to take an opportunity. It's the halfway point of the year. It's time to do something. Except in this case, we believe that doing something is getting a plan started.
And by the way, one of the things I do every half year, is do my spreadsheet. I do put the values into all those things and look at twice a year. That's it, because I think to look at things more often than that leads to bad behavior. You might look and say, why is that loss? What am I got to do something, because that's the other part of the investing ideas, right? Money in motion makes Wall Street a lot of money. Right? Do you understand that? Correct? I mean, when you're moving it from here to there, or you're buying this, or you're whatever it is, that makes them money. I think people misunderstand that. So part of the promotion of the fact that they can see the future, that they have this new great idea, is indeed profitable to the people that are promoting that idea. Very promotional.
Well, let me tell you a real story about money in motion, a true story. A true story from Don McDonald. Back in the day, we had what was called a book, and it was literally a book. It was a book of business. Mm-hmm. We had each of our clients in the book, and in the book there was a list of the securities that we had sold them over time. And every year or so, we were told to go back through our book and see what needed to change.
Oh, what's got to get turned over, if you will, churned, if you will.
Well, no, churning is illegal.
Oh, sorry.
Wait, what? Now, some brokers, some honest ones like my wife, never churned her book.
Okay,
but good. She wasn't making $1 million either, like some of those guys.
Oh yeah.
And we had a broker who was making 7 figures. He was also running the office.
30 years ago. 35 years ago.
35 years ago, yeah. And it was all about, just on a regular basis, you'd look at that mutual fund that you sold them, that natural resources fund back when gold was hot, or the high yield treasury fund. You go, well, interest rates are going to go up, so maybe we should switch it into something else, or technology's hot, we should. But what you needed to do, though, and this was unspoken. You see, if you move somebody within the same family of funds, this is something that everybody needs to know as a broker. If you move somebody from one fund to another in the same family, like American Funds or Oppenheimer or Putnam or whatever it might be, there is not a new commission charged. But if they move you from Oppenheimer to American Funds or from American Funds to Putnam, then they get to charge you a brand new 5 to 5 3/4% commission every time they make that transaction. This goes right to your point about it's an industry in which money in motion is critical. If you invest, if you buy, they hate buying and holding.
Yeah, it doesn't make them
building a portfolio.
They're not going to sell you a nice index fund either, because that's not going to make them anything either, right? No.
Right. And now, there is a new trend in the industry because of these pseudo fiduciary rules that really do stink, like Rule BI.
I thought it was BS, but okay.
BS, maybe. Yeah, that could be it. Big idiots. Yeah. And what they're doing now is a lot of the firms, Merrill and Morgan and all these guys, they're going to what they call a fee-based model, where they do more of a buy and hold, but then what they do to try to compensate themselves at the same level they were getting with the big fat commissions, they charge fees that are out and outrageous. I mean, in some cases, up over 3% a year.
Whoa.
That's too much money to pay for managing money. 855-935-TALK is our number. Give us a call on this holiday weekend. Get a book, and we will be back in a moment.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
And how you can make more, save it more effectively, invest it scientifically, properly, academically, less expensively, and end up with a lot more of it down the road, as opposed to letting your financial advisor get a gigantic chunk of it. And that's one of our pet peeves. It really bothers us, the state of most of this industry. We know it's frustrating to you, too. So we want you to call us at 855-935-TALK, 855-935-8255. If you'd like to know if your advisor, we did this a few weeks ago. Call us if you don't know whether your advisor is always acting in your best interest or not. We'll help you figure that out. It's hard. We know it's hard to find somebody who tells the truth in this industry.
Well, there's this piece that I just read last week from smartasset.com that talked about the 7 mistakes people make when choosing a financial advisor. And the number one is hiring an advisor who is not a fiduciary, which is, in the world we live in now, very confusing because basically everybody holds themselves out as a fiduciary when they are not 100% of the time. It's very tricky. I agree.
I hate that word, though.
Well,
there really needs to be a better word than that, because I think it still confuses
you can't spell
people.
it?
What in the world is a fiduciary? Well, it's not a word we use normally. We all believe, I think, that the professionals, people in professional industries, in the medical profession, in the legal profession, in the accounting profession, engineers, architects, that they are acting in our best interests. And
you assume
that they're always doing that.
Right, yeah.
You'd like to assume that, but it is so sad that so many in our industry are not held to that high best interest standard.
By the way, no
matter what the new law says.
Yeah. By the way, the second big mistake, according to this author, is hiring the first advisor you meet. Kind of an interesting. Yeah, I don't know. I mean, that's always tough, though, too, because that means you should go interview more people, I guess, right?
Well, and usually that first person you meet is somebody you know at church, a family member who just got licensed with a life insurance company or just became a baby stockbroker. That it's usually somebody close to you, and you don't want to go any farther because you feel like you would somehow be disloyal to that familial or societal connection you have with that person. And it's hard. It's really hard for all of us to understand that this is as much as more of a business decision than probably any other business decision, because you could ruin your future by picking the wrong person.
Number 3, by the way, choosing an advisor with the wrong specialty. I'll give you an example. I mean, most of the work that we do is around saving for or spending in retirement. That's, the focus of the way we build portfolios, all that kind of thing, the planning, all that. There are others who would tell you, I specialize in getting you in small, privately held companies. There are others who say, I can pick stocks. I can try to make you really rich, right?
Yeah, you should avoid all of those.
I agree.
I mean, the only one you should, I mean, what are you trying to do with your money? This is what you need to do. Ask yourself this question. What do I want to do? Oh, I want to make more of it. But for what purpose? What is the ultimate goal for that money? And for 90+% of it, that ultimate goal for the bulk of that money is what?
Retirement. Funding your life after you quit having an income. I put it that way. That makes sense.
Exactly.
By the way, you should give up. Yeah, because you don't need, unless you're trying to end up with more money than Jeff Bezos, who even after his divorce still has $114 billion, I think it is, or something, something in that area. Let that go, because you're not going to make that happen. So you really got to build up enough. Maybe it is the 1.7, whatever it is, so that you have enough money for retirement. That's what the goal should be. People overlook it. They think, I got to do better than my neighbor. I got to do better than the market. It's a challenge.
It's not a contest.
Yeah, but most people believe it is. I've had people even come in and say, my sibling made more than I did. Okay.
Well, congratulations to your sibling.
Right, yeah. So let it go.
I have a family member who believes, because of where he hangs out, with the people with whom he hangs out, he honestly believes that there is a 15% safe investment out there.
What? What is
I'm
it?
totally serious.
Are we doing
I
that
don't
next,
know.
Are we doing
It's
that
a
next
secret.
hour? We're going to promote that now?
Yeah, we're going to try and figure out why he
safe.
believes that.
Hit him on the horn.
And you know what that sounds a lot like? That sounds a lot like a Madoff kind of thing,
that's
doesn't
about
it?
what it was, yeah.
855-935-TALK.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Really important stuff here on Talking Real Money. I'm Don McDonald. Tom's over there. Give us a call at 855-935-TALK.
You got the air blowing full time.
Oh, I do.
It's chilling you down on your cross-country trip. There you go.
I forgot to turn the air conditioner off. You know, the air conditioners in RVs, really loud.
Yeah, I believe it.
Somebody needs to work on that. There is a market for quiet air conditioners
Should
in
I
RVs.
invest in it?
Yeah, that could be the
Okay.
hot investment for the
Okay.
summer.
All right, as it were.
Particularly
Yes.
when you can think about global warming. You know?
I prefer climate change, but okay.
I'm sorry. Oh, bad
Bad,
words.
Don, bad,
855-935-TALK. Give us a call. We got Gary on the line. Gary, welcome to Talking Real Money.
Hi, Gary. How can we help you?
Well, I've talked to 4 different financial planners. They all seem to be at the end selling insurance.
Yes.
So I thought I'd try you guys.
We don't do that on Saturdays, only on Sundays. You have to call us off air. Not kidding. We don't sell insurance. Go
Okay,
ahead.
cool.
Yeah.
We don't.
Well, the simple question is, if you have $175,000 in a 401 and you're going to retire in a year, what can you expect to draw off that percentage-wise for 20 years? Does 7.5% work?
No, generally
No.
not. That's a very
No.
aggressive amount.
And the only reason anybody can quote you a figure like 7% is when you're annuitizing, that you can get a figure in that, maybe in that 6 or 7 range, but part of it is your own money coming back to you. There is no true yield of 7% on a safe investment. It doesn't exist.
Okay.
I mean, is that
4, maybe.
so? Is the money to be drawn off the 401k, is that critical to the overall financial plan? In other words, is that an important part of paying the regular bills?
No.
So why are you
No, it's not.
why are you so aggressively taking that money out?
I pulled that number basically out of my rear end because
Oh, okay.
nobody can tell me.
Well, I mean, okay, but this is, yeah, okay, that's fair. That's fair. I mean, in a general sense, maybe you've heard the 4% rule. There's some in the industry that believe if you invest moderately, you have to expose some of your money to stocks, some to bonds. You can take out 4% a year and it'll last a very long time. And then, by the way, there may be sequence risk and other things that could wreck that. But I truly, in my heart of hearts, think if you invested 60% in a globally diversified stock portfolio, 40% in bonds. You could take out 4% for a long period of time. My personal strategy, I'm not going to take anything out till I'm 70, and I'm going to take out 5% of a variable amount. In other words, if I have a great year, I'm going to take out more. If I have a bad year, I'm going to take out less. Does that make sense?
Yes, and I'm 60-40 also.
Yeah.
For no other reason than I've listened to you guys. You said that before, and it made sense. Okay.
Does that help?
Very good.
And what Tom is saying is that
get-togethers.
Well, good. Come and see us.
Well,
Go
that'd
ahead,
be great.
Don. Yeah,
We got one coming up in July. But see, this is one of the things that people don't. Everybody's looking for an absolute answer, and the fact of life is that everything is variable. It fluctuates, and that's why I love what Tom just mentioned, which is that flexible distribution plan. We live a life of flexibility. We have to. Because things happen that we cannot possibly and never did anticipate. Life changes. Costs go up. Income goes down. We, throughout our lives, adjust to those financial changes. In retirement, you can probably do the same thing. If you have a great year and your money grows like mad, you take out 5% that year, it's a lot of money. If the markets go down, your portfolio doesn't do as well, the next year 5% is a little less money.
Yeah.
You adjust your spending at the beginning of every year based on that previous year's return, and it's when you look back at the past, and the past does not guarantee anything about the future, but when you look back at the past, it has been a very, very effective strategy, and it's almost impossible to run out of money before you run out of life.
Gary, thank you for your phone call. Let's go to another one here from Marty, who joins us now on Talking Real Money. Hi, Marty.
Hi, how are you?
I'm well. How can we help you?
Well, I called a couple of months ago and said that I had sold a house and I had some money to invest, and you suggested a way to do it, and I procrastinated, and now I forgot what you said.
Wow, you sound just like home to me.
How much money?
My wife's listening today for the first time. I'm in big trouble now.
You're in trouble now.
probably
You were already in trouble earlier.
Yeah, I was for other things I didn't do at the house. But so
you suggested some place to invest it that wasn't going to charge me something?
Well, everybody's going to charge you something. Now, we may have suggested something where the expenses were very low. Well, no, that's not true. There is an ETF now that actually will pay you to invest, but we would not recommend it. I can't remember the ticker.
How much money?
Yeah, tell us.
How much money, Marty?
$200,000.
And when do you need it again?
I don't.
So what is the purpose? You're going to leave it for others?
I own my house.
Yes.
I own my car.
Okay.
My Social Security covers my bills more than enough. So I just want to invest, just in case an elephant steps on me or something, and I need it for medical or who knows.
Yeah.
Otherwise,
don't. Yeah. The elephant thing, that may be more than the $200,000. Okay. So you want something that's going to grow a bit, right?
Mm-hmm.
But
yes.
you don't want to. You're not betting it all on Bitcoin or pot stocks.
I hope not.
No.
Okay.
My financial advisor suggested an annuity, and that was going to give me 3.5% for the first 2 years, and then a guarantee of 1.5% the years after. That's crap.
Yeah. That's
That's
word.
not worth it.
Good word. You said it very well.
Can I say that on the radio?
Yeah, you can.
I think you can say crap on the radio. Just a couple other words you can't say.
Please.
Then we'd have to beep you.
Right.
But here's the deal. What we probably suggested was a twofold approach. One, go to Talking Real Money, take the risk quiz so that you get a feel for how much risk you can tolerate. It's free. Then we probably suggested that you go to Vanguard and use two funds. And by the way, we now have those two funds online at talkingrealmoney.com.
That was smart. So where are they?
And so now
I'm on the website.
They are.
Yep. I see a guy trying to
do-it-yourself portfolios. You see a woman fixing a car.
Yes,
Do
I
it
do.
yourself.
You
She's a
simply
do-it-yourselfer.
put your cursor over that. You click
on
there,
that.
and then we give you the VT
Click on her.
Wax. That's the stock side, and the VBTLX. That's the bond side.
Yeah.
The second one is the first one is VTWAX. That's VT Wax, and then Don, the second one is
VBTLX. But they're right there on the website. Just go to Talking Real Money, take the risk quiz first, and that's under the little Scrabble tiles that say risk or whatever those are, little piled up things. And then click on the woman who's fixing a car, the do-it-yourselfer woman, and that'll tell you what the do-it-yourself portfolios are. They cost, get this, the stock portfolio costs 0.1% per year.
Wow.
The bond portfolio costs 5/100ths of 1% per year. Yeah. 5/100ths of 1% per year.
Pretty inexpensive way to invest your money. And it's not free, Marty, but it's far less than the annuity you would have purchased for sure. And you can get it anytime.
And you'll own 25,000 different securities between the stocks and the bonds.
Love it.
25,000. Thanks for the call, Marty. We really appreciate it. 855-935-8255 is our number. Give me a call. And Tom,
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And you know what we were talking about, those classes that we do that show you how to invest scientifically and how to create income flexibly? Well, there's one of those coming up in July. Tom's going to be teaching it, and you get lunch with it, and it's only an hour, and it's really cheap, and the lunch is great, and the class is powerful. All you need to do to sign up, it's a very, very limited number of seats available, but go get your seats now. Go get your ticket for the lunch and education at TalkingRealMoney.com. That's TalkingRealMoney.com.
That the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?